Welcome back to this week's market update. Today is Monday, March 31st, 2025, and we'll jump right in. Taking a look at last week's market performance, stocks declined as new tariffs on the auto industry and concerns over additional tariffs potentially coming this week weighed on investor sentiment. Market pressure intensified on Friday again, as you can see, with the PCE inflation report coming in higher than expected, sparking some more concerns over economic growth. As of close on Friday, March 28th, the Nasdaq Composite was down just shy of 2.6%, followed by the S&P 500, which lost about 1.5%, and the Dow Jones Industrial Average down just shy of 1% as well. Bonds, on the other hand, were flat, with the Barclays Aggregate Bond Index up 0.04% last week. Moving into our economic data from last week, February PCE inflation came in higher than expected Friday morning, with headline PCE coming in at 2.5% and core PCE, which excludes food and energy, at a higher 2.8%. So both have really been trending in the wrong direction, still below 3%, which is good, but they have been trending up in the last 6 months or so. Alongside the PCE inflation report, personal income, spending, and savings for the month of February revealed that while personal income grew, this increase did not translate quite as much into higher consumer spending last month. Personal income rose 0.8% in the month, exceeding expectations. And then when we look at it on a disposable personal income, which is after tax, it grew an even greater 0.9% just in the month of February. Personal spending rose 0.4% in February, coming in lower than expected despite the stronger income growth. And then personal outlays, which includes spending, interest payments, and transfer payments, rose 0.6% in the month. With income growth outpacing spending growth, the personal savings rate continued to rise here to 4.6% as of February, marking 2 consecutive months of income growing at a faster rate than spending. Also, last week, we got the Consumer Confidence Index for the month of March from the Conference Board. It showed both present situations and expectations were down in March quite a bit. And on the Expectations Index, we actually fell to the lowest point in 12 years, below this recessionary level of 80 on the index. So very cautionary indicator right there. Very bearish, lowest point in 12 years. You can see the last time we got close to this was 2022, although we did dip below that level. So very interesting stuff here. By demographic, the decline was driven by consumers age 35 and over, while confidence rose slightly among consumers under age 35. By income level, the decline was fairly broad-based across all income groups except for those earning $125,000 per year in their household and up. Adding to that weaker consumer confidence data, the Trump administration also announced new tariffs on the auto industry last week, imposing a 25% levy on cars not made in the U.S. And according to the White House, roughly 50% of the cars purchased by Americans in 2024 were imported and would be impacted by a tariff like this, suggesting that these tariffs will likely have a significant impact on both domestic and international automakers. We saw stocks of major vehicle makers such as General Motors and Ford here both fall pretty sharply following the news last week. Last but not least, in the housing market, new home sales came in below expectations at 676,000 units sold in the month of February, with 500,000 new homes still on the market. We saw the median sales price for a new home sold fall slightly to $414,500 here, and you can see we have been trending slightly lower since this peak in October 2022, when the median sales price for a new home sold peaked at $460,000. That concludes this week's market update. So we just want to thank you so much for tuning in, and we look forward to seeing you again next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.